Hey, morning, folks, and happy hump day to everyone. Hope everyone's doing all right out there. Not a lot in terms of charts, really, apart from, well, the two majors right here. We had tech and oil sectors basically driving the downside on US equities yesterday. As we can just have a look, see here, the Nasdaq is now back trading below that prior gap there. Um, and this happened overnight. So, renewed COVID fears in China is spurring this selling at the moment. At the same time, uh, on top of that, like we have some energy updates, and I've outlined this in the basically morning read this morning that Germany will be fully phasing out Russian coal by August the 1st. And Russian oil comes December. So the big ticket item for today really is the US inflation print. So we saw just a bit of edging up um, on US equities and also paring back on this crude complex here as traders kind of like wait for the print to come out. That'll be around 13:30 London Standard Time. Speaking on US inflations, we are expectations of this number is at a record high. We're looking at a 6.8% June reading compared to the prior 6.6% in May. So this is if it does come in line, we are looking at a new 4-decade high. So really fun stuff. Apologies, I'm just not feeling that well at the moment. And at the same time, the IMF has cut growth forecast for US GDP 2022 growth to only 2.3% from prior estimates of 2.9%. That's a lot of cutting over there, considering how big the US economy is, right? So, and due to the trajectory of the Fed hikes, they're expecting US consumer growth to hit zero as early as Q1 next year, and it will then raise unemployment rate to 5%. If I'm not mistaken, right now it's about 3.6, 3.7, and that has been stable, despite payrolls numbers and all these things, that has remained largely stable. And they're saying that by the end of 2023, we would be looking at a 5% unemployment rate. So really bleak data out of the IMF there. Sorry, really bleak report out of the IMF. Um, so that is it really. The US inflation is set to come out, and that will be all eyes will be on that. That's for very sure. Apart from that, so APAC really, I mean, you'd expect a bit of this sort of like the same spillover going to APAC with tech getting hit and renewed COVID fears, but we didn't really see this, and this is because, the MSCI gauge was actually buoyed by Japanese stocks, which are doing quite well, and we relatively undecided stuff on, the Chinese equity indexes. Shanghai Comp and whatnot. Other than that, the RBNZ, hikes rates further by 50 basis points, and this was pretty much expected, and they are saying, more is to come. Um, South Korea just did a historic 50 basis point hike as well, and this is historic because since they've adopted the interest rate as a primary tool to basically combat inflation, sorry, not say combat inflation as part of their monetary policy tools in 1999. This is the first time it's ever raised rates by 50 basis points. That is it from me, really. As you can see here, if you just talk about charts real quickly, this is sort of like the baseline we're looking at here with the $90 handle just slightly below on WTI crude. I mean, if you break that below that, I don't think the 90 is going to be much of a tether before we get down actually over here. Yeah, there you go. This prior resistance tried to get up a couple of times, denied, and then bam, we go. Retested once, and this is 86.88. So if we do get down there, I do suspect some buyers are going to come in. If it breaks below with a whoosh and a splush, then That'll be a crazy fun day for crude, shorts, I would think. Anyways, have a good session ahead. I hope this was useful. This read, bring you the daily briefing. Any questions at all, just hit me in the comments. Be happy to answer those. Cheers.